I would like to welcome everybody to Scalping Trading School. Okay, let's check the connection first. Please tell me, can you see the screen? Can you hear me? Is everything okay? Wonderful, okay. Great, I see the pluses. So let's begin. We have a lot of ground to cover today. I'm happy to see all of you today at the first lesson of our course. Let me take a couple of minutes to introduce myself and to tell about our school so you know who I am and where you are right now. We are Scalping Trading School. We have our prop company, which is one of the powerful and successful companies in the field. And we also have a very strong team of professional experts and experienced traders. It is a real trading environment where traders actually work with real capital and real responsibility. The founder of our school and our prop company is Vladislav Cheremissing. He's also here today with us, so I would like to say thank you. Thanks for giving me such opportunity. Also, I would like to say that we are official partners of C-Scalp. This is professional software used by scalpers and active traders. And today I would say that around 10,000 traders are trading with our prop company. I think this is a very good number of traders. And this includes both external traders and our students who have completed advanced training and stayed to work with us. Now a few words about me. My name is Julia. I have been trading for about 5 years. I think like many others, I started with investments, trading, intraday trading, and basic approaches, trying to find my style, logic, and understanding of the market. But at some point, I realized that I needed to trade in the moment, not over the long time. That's when I came to scalping. And about in 2023, I think I joined Scalping Trading School. I went through advanced education, achieved some results, and I became a mentor and started working with traders in real trading within a prop company. Over time, I was actually offered to develop the English language direction of Scalping Trading School, so here I am. And to be honest, since I joined the prop company, I stopped trading on my personal accounts. I just don't need to because I know that in prop company I'm protected in terms of risk, capital, and work rules. And it is a completely different level of responsibility and approach actually. Before we move on, please, if you can maybe share your trading experience in the chat, whether you are a complete beginner just starting out. Don't be shy, let us know about it. And maybe somebody is already trading. And for those who are already trading, I want to ask you, please guys, let's be a little bit patient with those who are new because they don't know anything about it. So we are going through today the base, the foundation of trading. Okay, and okay, today let me tell you how we will communicate today. Okay, we will do about 40 minutes or 1 hour blocks. And during this time, you can write your questions in the chat. In the beginning of each new block, I will answer them, okay? This will be better in order not to stop for questions. And there may be several blocks like this because it depends how well the information will be understood. So, in our Scalping Trading School, created by Vladislav Cheremissing, there is also advanced training. I would like to say a few words about it. The training, the advanced training, it includes 24 lessons. The lessons are held live online twice a week. One lesson can last 2, 3, or sometimes even 4 hours because we really go deep into the details. We are not giving some information. We are going really deep into trading. And the students who have completed the advanced training, I would say that they have reached higher trading sizes already and earning good money right now. So I also want to say that after finishing this training, we give each of you the opportunity to grow with us. We are not leaving you on your own. You can become a mentor, you can become a teacher or head of cluster, and we care about you even after you finish this education. Especially, I would like to pay attention and tell you a little about our prop company. Honestly, I have accounts, my personal accounts on Bybit and Binance, but I don't trade on them much anymore because in the prop company, I know that I'm protected. I know that if something goes wrong, the prop company will protect me. What does it mean? For those who don't know, let me explain. Our prop company, the trader who is in prop company has a daily loss limit. Every trader. Usually it is at 2.4% of daily total deposit. If you reach this 2.4%, the system will block you and you won't be able to trade until the next day. This means that there is no liquidation in the market. It is impossible because the system will block you when you will reach 2.4%. Also, I want to say right away that we don't use leverage or indicators except volumes. No leverage, no indicators. So when we trade, we rely on real percentage. And the best indicators are our eyes, our knowledge, and psychology. This is the only things which we are using. Okay, so let me go through very fast of our program. We have, as I say, a 2-day intensive. Today we will start with the basics because everything else is built on them. And it is very important to understand this from the very beginning. To begin with, we will talk about trading styles. This is very important, and there are several approaches, and each trader needs to understand which one suits them. We will analyze the main styles and what stands behind them. Then we will move on to market participants because we really just to know them. We are not just talking about buyers and sellers, but about those who really move the market, create liquidity, and form the trends. And of course, we will look at levels on the chart. This is the foundation of any analysis that, like support, resistance, and key zones, that helps us understand and predict where the price can go. This is very important. In the second day, we will cover risk management to prepare you for real trading, and you will start trying already to enter the trades. And of course, we will go more deeper for the levels, how to mark them correctly, and how to use them in real trading scenarios. Okay? And one more thing, I would like to say that after the second lesson, each of you will receive a trading account in our prop company. And I will say that this $21, it's real money. It's not demo or simulation. It's a real money. And this is done actually on purpose. Our goal is not to make money right now. $21 each of you will receive. Our goal is to learn how to work properly, manage risks, and not lose the deposit. It's regular market and real trades with just a small starting size. Yes, it's not 2000, but before working with large sizes, you need to learn how to do that. And I will tell you this, that the patterns work on any size, either $21, either it is a $2000. It doesn't matter actually. It's all the same. The only difference, it is a psychology. Because if you learn how to treat $20 the same as $20,000, you will succeed. And I want to say this right away. If you follow the rules and complete the tasks, no one will close your account. You will stay with us in prop company, you will increase your size, and you will be in our community. You are not here, we are not here to catch you making mistakes. We are here to help you to learn how to trade. And this is very important. Yes, of course, you might say in my thinking of, well, what is $21? This is nothing. But as I always say, try to keep it. Just try to keep it or try to grow it from, for example, from 21 to at least $30. Try to make $30 for 1 week, of course, like we are saying. From my experience, the most important things in trading, it's not strategy, it's not indicators or even the size of the deposit. The most important things are psychology and risk management. Risk management, this is very important. And plus psychology. This is two things which we have to go through. You can learn a strategy, but dealing with yourself psychologically, it's not that easy. It's difficult. I think everybody agrees with me. Well, okay. Let's start. I think it's better if we will start from the participants on the market who actually move the price, because we have to know them. I will write and draw today a lot, so let's write them down. Participants on the market. Participants, let's make them big. Who are they? I think many of you already know about them. And the things which I want to say, that market, it's not just a chart with the candles, which you can see. The market is made of people, algorithms, and big money. In every candle which you can see on the chart, a lot of money is involved. So who are these participants? I think many of you already know. Let's write them down. First, of course, it's whales. It's our big participant with big money. Whales, and I want to write like this, big money, in order for you to know about it. Second, who else we have? We have hamsters. The another ones, traders. We will go through them. We will talk about them right now. I want to write it down first. Another ones are robots. And we also have market makers. So who are these participants? Let's start from the first one, the whales. These are big corporations, financial organizations, banks. These are people or organizations with large capital. They have a lot of money. Large participants create movement on the market. We will look for their footprints and work together with them. Our goal is to find these footprints and move together with them, but not against them. What are these footprints actually? How can we see them? Let's go through them. First of all, let me draw like this. Maybe you will understand this. I will explain now. And like this. So let's see. The first one is the burst of volume. When you see a big volume, this means that a big money are here. A big participant entered into the market. So this is the first burst of volume. Let's write it like this. This is first one, volume. The second one, price impulses. So when you see impulse candles, this is also means that big participant is entering the market. This is second. These are the footprints of whales, of big participant. Impulse. The next one is candle tails. We will talk about candle tails today, candle wicks, okay, also it is called. If you see this kind of wick on the chart, this is also mean that there is a big participant inside. The third one, candle wick. I will send all of the pictures to the chart so you will have all of them. And of course, we have structure breaks. What does that mean? It means that when price was going up and sharply reverse and start going down, so there is somebody up here who is holding this level and it's not getting in, and it's not letting the price going upper. So it's a big, also big money here. Okay, so our job is not to fight the whales, but to stand together with them and move together. If we see trend movement, so we go together with them. Okay. Okay, so the next participant, it's hamsters. I won't spend much time on that because I don't want to talk about them actually, but these are the ones who just play in the market. These are people who don't have proper training and they just try to make money without sufficient knowledge. So, but what about the traders? Traders, these are people like us. They are forward-thinking individuals, constantly trying to improve their skills, not just play market, but work seriously. Most people, why lose money? Because of haste and greed, and of course lack of a plan, because they don't plan their trade. They just jumped in and that's all. They don't understand what is going on here on the market. A professional always knows when they are going to stop. Okay, remember, trading, this is not a casino actually. Yeah, if you want to become a real trader, a real professional, it is a job. It's a hard job and there is no money button here. If you want to become a professional, I will repeat again, you will need to work hard, very hard. So the next participant, it's robots. Robots are algorithms that work according to rules and without emotions. So this is system. Anyone right now, anyone can buy robots. They are even sold on social networks. But of course, the most powerful robots, of course, they belong to the whales. They create them and they use them. Many of you probably seen how robots sometimes trade in Bitcoin. What is robot? I think many of you saw this kind of picture on the chart. It's a very straight candle moving one way constantly without any if it's a long trade, it's all green candles and they're all one size. This is robot. And when big whales turn on the robot, there are huge amounts of money inside of this movement. Okay, so and the last participant which I would like to talk about, it's a market maker. Actually, these are people who work on the exchange and intentionally hold the price to prevent sharp moves like squeezes and sudden spikes. They also provide liquidity in the market. I want to point out that market makers are not allowed actually to earn money directly from manipulating the exchange. There was even, as I can remember, there was even a story where a market maker pushed the price and made a large profit, but the exchange sued him and they won. I think it was on Binance. So I think with the participants, everything is clear, right? There is nothing to... If you have any questions, of course, write it down in the chat. But let's move on. Okay, let's go here. And I think it's better we will write it here on the clean. Let's write like this. So now I would like to talk about trading style. Let's write it down. Trading styles. I think many of you already know that there are different approaches. And can somebody tell me what trading styles exist? If somebody knows, please write it in the chat. But we will start from one of the calm, I would say, style. It is investment style. Investment style. What is investment style actually? Investment style, it's simply, it is buy and hold, and that's all. Let's write it down like this also. Buy and hold. What does it mean? This means that you buy an asset, you put your money into some asset and you hold it for a long time. It can be 1 year, it can be 2 years, 3, 5 years. So it's a long-term investment. You put it inside of one asset and you sit and wait, and you just expect dividends from it or some significant capital. Of course, this works only if the portfolio is well built, because there is some special strategies for investment style, and we will talk about it now. This is basically a separate group people. Some traders fully dedicate themselves into investment. they like it. They like just wait. And it's their path, their philosophy, their way of life. And actually, they are real professional at it. Why not? We are all different. I also worked with investment before, actually, but later I realized that scalping suits me better because a scalper works in the here and now, and the results become faster. The dynamics are higher, and actually I like it. But that's me. Now, okay, what is where do we invest? Who can tell me where do we invest? We invest in spot market, of course. And I want to write this down in order for you to have it also. It's a spot market. Indeed, the investment style in crypto is based on spot market. Yeah, actually it is. And as you know, Bitcoin has a halving about every 4 years. And after the halving, a growth phase usually begins and the market shows strong upward movement. And all altcoins shoot up, capitalizations grows, and many people make serious money on it. Yeah, do you remember past cycles? What were the jumps? How many people actually profited then? And I think right now, many believe that a new growth phase is coming, but no one knows exactly when it will happen. Spring or later, or maybe market pause right now. So it's still an open question. But right now it's important to understand that many have already built their portfolios and invested in spot, and now they're waiting. They're waiting because market it's changed. It has changed a lot. Crypto market especially. Let's be honest, many are in a deep drawdown right now. That's the reality of the market actually. And income from investment style often comes after several years. So you need to know if you are ready for that kind of waiting. Now, what is the important in investment style? It is fundamental analysis. As I said before, you cannot just you see any asset, you like it, and you just put all of your money inside of it. No, you have to do fundamental analysis. This is also very important. Let's write it down right away because it's important. So what is fundamental analysis? Fundamental analysis in investment style, what does it mean? It means, first, the financial indicators of the project or company, the development of the product, what is the team, technology, industry prospects, demand, the real world application. So you must clearly understand what you are investing in. You are not just buying a picture on the chart, you are analyzing the project itself, deep inside. And your investment strategy depends on this. There is a technique and fundamental analysis. But there is a difference between them, and I want you to pay attention to this. For example, we as scalpers or intraday traders, we mostly use technique analysis. We focus on levels, volumes, patterns, and movement of structure. But in investment style and investment strategies, fundamental analysis is the foundation. It's a completely different approach with different logics and depth. And one more thing which we cannot be ignored, it is a meme coin. What is meme coin? Do you know what is meme coin? Meme coins are assets that usually don't have real value, and they can show sharp price spikes but remain extremely risky. Often they get delisted, liquidity disappears, and investors end up with losses. So you need to be especially careful with them. I wouldn't recommend to invest in meme coins, actually. What do you think? What are the advantages of spot? Let's talk about them, because yes, as I said in the beginning, it's a very calm trading, because you invest and you wait what will happen. So the first advantage, difficult to be liquidated. Do you remember this? First, it's difficult to be liquidated. Liquidated. That means that it's much more difficult. Why? Because there is no leverage, as we said before. Do you remember? No forced closing of positions like in futures, and therefore the risk of immediate loss of the deposit is lower. You cannot be liquidated. The only thing which can happen, it's a deep drawdown. The second point is that it is psychologically easier, right? As we said before, it's calm trading. I will repeat it again. It's calm trading. Let's write this down also. Psychologically easy. It means less stress. You don't have stress at all. But without leverage, as I said, we don't have leverage. We don't have constant pressure on margins, right? No fear of liquidation, and you can trade calmly. That's what I was talking about. The third advantage is lower risks. But let's clarify it right away. Lower risks come with the right approach. If you calculate your position size carefully, follow your system, and understand what you are buying, then the risks are really lower. But that doesn't mean that there are no risks at all. Risks are always there. But anyhow, I want to write this down. Lower risk. So another advantage is absence of funding fees. Yeah, on spot market, we don't have funding. On futures, you pay or receive funding fee, but not on spot. There is simply none. This is also make trading more easier, right? So let's write this also down. No funding fee. This is important also. Okay, so these are, I missed it. These were advantages, right? And of course, this style has disadvantages, and we will write them down also. Because you have to know about them if you want to invest in some asset. And let's be honest, the first downside, which I would say, I want even draw it. If somebody doesn't know, I would like to explain this. In trading, we have two positions. The first position, it is, let me draw it and then I will explain. The first position, when the price goes up, this we call long position. We go long. When the price goes down, this is short position. So in investment style, what do you think? What is disadvantages? First disadvantage in investment style. If we will take this picture, we can understand that investment style is just buying and selling. We can earn only in long position, only when the price goes up. So there is no short position in investment style. That's why if the price goes down, then we cannot do anything. We just sit and wait. That's all. You are going in minus, you are going in red, and you cannot do anything. You just wait. What will happen next? So let's write this down. I think it's quite important disadvantage. No short. Let's write like this. No short position. So you understand, right, that if the market falls down, you cannot earn money. You just sit and wait. So that's why it comes from here. It comes the second downside. It's a deep drawdown. Yes, there is no liquidation, as we said here, but the asset can fall by 50%, 70%, even 80%. It is possible, and you cannot do anything. Either you come out, either you just sit and wait. And actually, there have been such cases. Many people right now in deep drawdown. And moreover, some projects have been delisted. And by the way, delisting is a serious risk. The exchange simply removes assets, liquidity disappears, and you are left with what you have. For example, delisting happens sometimes on exchange like Binance or Bybit. And if you are an investor, you must consider this part of this of investment style. You have to know about this. So let's write this down. What did we say? Deep drawdown. Let's write it like this. Deep drawdown. Okay, and what else we said? We said delisting. Yeah, let's write like this. It can be delisted. Can be delisted. It's a very serious disadvantage, I think. Okay, and what else we have? We have one more important downside, I think, because when you invest in some asset, for example, you make a portfolio and you sit and wait. So what's happening with your money? Your money is frozen. You cannot use it. You invest and wait. The money doesn't work actively. It just stays in the asset. And if the market stagnant, and it's happening, so the market can be like this. For 1 year, for 2 years, just like this. And you stay in one point. You don't go up, you don't go down. And your capital is frozen. So In my opinion, this is probably one of the most sensitive downsides of spot. It's let's write it like this: the lack of flexibility. Let's write like this: money are locked. I think you will understand what does it mean. I want to say also an important point about the number of assets if you take investment style. So before, as you remember, maybe somebody remember about that, before there were far fewer crypto assets. The market was smaller and more compact. The choice was limited and liquidity was concentrated in just a few assets. And at one point, the number of assets grew sharply. Does anyone knows or remember maybe what number it grew to? How many new assets have appeared? I would tell you 5 million assets, new assets. Can you imagine 5 million? It's a lot. Okay, now another question. Of these 5 million, how many assets have been delisted over the past years? Almost half of it. Can you imagine? Just imagine the scale. 2.5 million assets have been delisted. It just was removed from the market. And how many people invested in this 2.5 million? How much money was frozen here? So that's why I'm telling you, with investments, you need to be careful. Work with your head, not with emotions, but with calculations. We as scalpers, we work in the moment. So we enter, take the move and leave, and that's all. We don't sit for years. This is a completely different style. Completely different style. And even the way of thinking is completely different. You need to think strategically and distribute your capital, right? So for example, if you have let's say $5,000, you cannot put all of them in one asset. That's not professional. The most important thing in investment style is diversification. This is not serious if you put all of it in one asset, you know. You have to form a portfolio correctly and balance it. For example, $5,000, you divide it, for example, in 5 assets. Here is 1,000, here 1,000. So you have to work with your hand. You cannot just put in, that's all. For example, like this, like this. This is important. This is very important. You spread your deposit across several assets and balance it. And one more thing, when we do analysis, fundamental analysis in investment style, we use only 1 day time frame. This is also important. This is an investment. When we are like a scalpers, like us, I use 1 hour time frame. In scalping, we use 1 hour time frame. So you see, this is a absolutely different approaches in scalping. So because why one day, because it's a long-term story, you know, because we are interested in the global picture, not in the noise within the day. Okay, I think it's quite clear. Let's see right now some maybe examples in the chart. Let's take, for example, maybe this one. When you do, as you remember, I said, when we do fundamental analysis, we change to 1 day time frame. Okay, yeah, let's see this one. If we decide to consider this asset as an investment, the first thing we do is go to, as I said, daily and repeat daily time frame and look at the overall state of the asset. So what do we do next? First of all, we have to set a level and place it carefully according to all the rules. Don't worry, we will talk more about the rules for building levels later, okay? Right now, just we can see this area, for example. We put it in green, and I want also to make it 4 pixels because I can see that this level is quite strong one. And just for now, remember, this is a level of support and we mark it in green, okay? Everything above the price, it is a resistance and we mark it in red. Let's put here also level. And we mark it in red. Okay. Now, what do we see here on the chart? Let's see. It's August 2023, and until now, the asset has stayed at this level. What does it mean? That means the level has been tested for a long time, and the price is pushed back from it. It comes here, it's again pushed back. And this is where the most interesting part begins, actually. If the level holds for so long, it's no longer an accident. This is already an area of interest for a large participant. It is an area where accumulation or position protection happens. These are exactly the moments an investor must look for on the daily time frame. I think everybody, even new people who are just entering the trading, can see that something is happening here, right? So we can see, even logically, that this is some line which the price is not going down. So what does it mean now from the side of trading? If we go deeper into analysis, as I said, it's a big participant is here, because 3 years holding one asset on one line, on one level, it can do only a big participant. Okay, so if for example, if a scalper sees a local impulse, we take it. 1%, 2%, for us it's good movement. While an investor looks at years and asks themselves, am I ready to hold this movement for a long time? You see, it's 23 and 26, 3 years. Are you ready to wait for it? So, but anyhow, this is a completely different way of thinking. Somebody likes it. So guys, when you choose a trading style, you must honestly answer this. Okay, do you want a work quickly, or you are ready to wait for years? We are all different, you know. But anyhow, these are two absolutely different approaches, and they cannot be mixed. Okay, let's see what's happening actually during all this time, all these 3 years. You can see it on the chart. The asset, let's see, the asset moves along one level periodically, jumping off. You see here, jumping off this level, but overall it stays within the range, right? So it's coming down here, then it jumps up, then it's again coming down. It's not letting, somebody's here, no, somebody is not letting go down. You see here was a try, was a good try, but anyhow it was jumped off again. We can also here, for example, if we make it a little bit bigger, the picture, we can see that there is a zone. You see, there is a zone within which this asset is moving all the time. Here, you see, we can also note this zone. You see, yeah. Here it made impulse. Here it made impulse. Then it's again making impulses, but they're not going down here. If we measure, we can see this diapason is 40%. 40%. And if you look closely, you can see that the structure repeats all the time. Here, you see? Here. Then let's go here. It's again repeating. Here. And again here. So it's all the time repeats. So when we see the history of this asset, we know how it behaves. That there is some accumulation here, then it goes up, sharply up, accumulate again, and again goes sharply up and down. So we can predict the movement, how it moves. And if I would decide to invest in this asset, what would I do? I would wait it to come down here, buy it here, put my stop loss here, and wait. But what's happening with, do you remember we were talking about hamster? As I told you that time that I don't want to talk a lot about them, but anyhow, I would say this is exactly about them. The people who don't know what they're doing, they're coming to market, they buy it here, they jump in here, and then they wait for a big profit. But no, this is not happening like that. What's happening? Let's see. It's bought here, then asset goes down 76%. Can you imagine? 76%. It's a lot. He is sitting and waiting what's going to happen. It's not working. So the people don't know what to do actually. If you don't know how to make a fundamental analysis, you cannot trade correctly. You won't have profit. This is really serious work. Many actually, that's why I'm focusing so much on this topic of investment, because many people want to trade on spot. Some don't have time, for example, to trade actively, right? Many have jobs, families, businesses, they don't have time. But scalping, for example, it requires time, a lot of time. And you need to be involved, you be involved in and track the market constantly. So before choosing a style, you must honestly understand how much time you are ready to devote to the market and whether you are ready to experience deep drawdowns, for example, like this. If you don't know what to do, if you don't know how to analyze. investment are not made on emotions. They are based on calculation anyhow, distribution, as I said, and fundamental analysis. And only after that you can enter the trade like this here. Intraday trading also takes time. It also takes time. You have to see it and you have to research it. Of course, scalping even more so. You need to be in market all the time, watch closely and react quickly. Investments, yes, it takes less time, but anyhow, the key point is entering the position, where you will enter the position, where you build your position. As I said, remember, just look, it's all the time. This kind of examples I have all the time. Person just enter the market over here, and it just sits and wait that he will have 100% plus. But no, look, you see what's happening. 80%, 80%. And now he's sitting and waiting for the price to return. But who knows, will it or no, and when? So, that's why I want you to think like professionals. And I think logically it's understandable. Where is the best entry point for investment? Of course, it's in the area of strong support. This is a support area. Cheaper we buy, expensive we sell. That's all. We buy at the lows and sell at the highs. It's simple actually, but in practice many do the opposite. Yeah, a clear support area is the foundation. You see, it's a clear support. 3 years, it's hold. It is holding this area. It is well tested. We will go through the levels and details a little bit later, because before you start trading or investing, you need to understand several things. The point where you build your position, this is important. Here, these points, entry position. Why exactly here? You have to understand, why do we have to buy here? Not here, not here, but only here. And anyhow, who is behind this level? Who is behind this? So, I think you already know, as we talk about it in the beginning, the whale, only the whale, only the large participant can hold 3 years, during 3 years, this area, this price. For example, I think everybody knows about Solana, this asset Solana. How many years this asset has been on the market, how many cycles it has gone through. I think everybody know about it. And if you dig deeper into fundamental analysis, into the technology and ecosystem of Solana, you will understand that there is a real infrastructure behind this project, and an asset doesn't just exist by itself. If it lasts so many years, it has resources. It has development and the interest of big players. And it's not like, it's not like someone just created an asset and it survives on its own for years without support. No, it's impossible. Therefore, investments aren't about emotions. They're about understanding who is behind the asset, about the entry level, patience, and calculations. So only then does it really work. Okay. Okay, guys. Let's make a 10 minutes break, and then we will continue. Let me write it down. This 10-minute break. I will leave this screen like this. Just turn off the microphone. Okay, 10 minutes break. So, okay, let's move on. Let's continue. What we were talking about? We were talking about investment style. So once again, let's repeat the base. We buy at the low and sell at the high. It sounds simple, but behind this is an understanding of the market structure. If an asset doesn't go below a certain zone for a long time, it means someone is holding that area, meaning there is an interest here. And if the level lasts for months or even years, it's no longer an accident. Again, repeating it. But there are situations, for example, when there is no clear support. Let's see, sometimes there is no clear zone, no tight consolidation, and no clear reaction. Let's see some example. For example, let's see this one maybe. Yeah, let's take this one. As we already know, let's put some levels first. We can see this week of candle, impulse candle. We mark it in green. This is a level of support. And there is one more level. Let's put it like this. So what do we see here? We place the level at the candle wick here. What we see, we can find a certain area here, right? Some kind of zone. But now an important question actually, did the price really go up from this level? As we can see, did it have strong moves, some moves, or asset simply moves within the range and doesn't go higher? This needs to be analyzed. With a fundamental approach, we always look at the history of the movement. If there were regular impulses, like we can see here, you see, if there are some impulses, okay, it means the zone is working. If the asset has been staying flat for years, in this range, for example, and it goes like this, it's flat. For one, it can be for 1, for 2, for 3 years, so many years it goes like this. It can be in flat. So what the reason then to enter this, to build the position here? There is no need for that. So sometimes it happens, yeah, there really is no clear support, and if there isn't clear support, then no one knows where actually the bottom is. So it can go more down, and how far it can fall, nobody knows. So that's why here you need to be especially careful. So guys, in these 2 days, we will gather all the knowledges step by step, like, you know, like a builder. Today, trading styles and levels. We will go through some levels. I will give you some simple levels. Tomorrow, we will go through formations and risk management. It will be interesting. Next lesson. And in the end, when you will have all of the information, it will come together into one unified system. because investments, scalping, intraday trading, they are not separate topics. They are just tools. The more you know and understand, the stronger your arsenal becomes. And when you have the whole picture, you start to see the market deeper. You start to understand what is happening here, and you have the potential not just to guess, but to understand the market. And here is an important point. Actually, every trader should really try different styles. For example, I have tried all of them, and that's actually a huge advantage, because only then do you understand what suits you the best. Some people like dynamics and quick decisions. Others prefer calm and long term, like here, for example. And well, we are all different, and actually that's normal. All people are different. That's okay. And that's why we offer different approaches. In our school we teach all of the approaches, all styles, and in the end, student already choose which suits better for him. Okay, so about investment, one more word. We have to, very important, we have to definitely study the asset. We have to read about what kind of project it is, who created it, whether there is real technology behind it or if it's just a meme coin. Many people start actually like hamsters. And I think this is a stage like everyone goes through, I think. But the real question is, why lose if you can analyze, right? So I think you didn't come here but just by chance. It means you're already involved in crypto and you want to know something deeper, more deeper. Some of you for a long time already trading, maybe. Some recently, some have traded already. Some have heard many stories about it because it's been everywhere right now. It's time like this. So both good, and let's say maybe some bad stories. But an important point that you need honestly understand that if you decide to work in crypto, you need to learn. You need to understand what you are doing. Why lose deposits? Why do we have to lose it? Why fall into drawdowns because of lack of knowledge, And why lose money on emotions? At some point, I also decided to put my money not just into an asset, but into knowledge, because one day I just understood that I want to know. I want to know, and I want to invest in myself, because learning is also a form of investing. So, and that may be the smartest choice you can make. Actually, I don't need to advertise anything to anyone. I know that I was in the right place at the right time, and right now I trade calmly. In 2 years, I'm already moved to a large size, and most importantly, I enjoy scalping, and I enjoy working in the moment. I choose for myself, I choose exactly this style, scalping. So I think about investment style, everything is clear. If anybody has any questions, so please write it down in the chat. And I will move on to the next one, the next style. And okay. Let's write it here, or wait a minute, we were writing here everything. Let's come back here. Trading styles, yeah. Okay, let's write it down. Intraday. It's a very interesting style. I think many of you have started from this style of trading. What is intraday actually? Intraday, it is a day trading, right? Day trading. So what does it mean? It means that trades open during the day. But an important point, it doesn't mean the trade must close strictly on the same day. It may last for 2, for 3, sometimes for 4 days. It's also intraday. The main logic of intraday, its entry is built as an intraday structure. Because for every style, there is a different structure, different approach, as I said before. So I have a question. Who remembers the classic intraday model? Who knows? Maybe somebody knows. Risk management, we will analyze in more details in the second lesson, but now just a classic. What is classic intraday? It's 1 to 3. What is 1 to 3? What does it mean? It means 1% is risk, just risk, and 3% it's profit. But that was before, actually. So what do we do? Let me draw. What do we do? We enter the trade. For example, entry point is here. We place a stop loss beyond the entry point and set 3 take profits. The first, second, and the third. Okay? I think this is understandable, right? So everything is clear. They found a good trend entry, took all 3 targets, and that's all. And that's good. So, but that was before 1 to 3. Right now, this model is not working. What's happening actually? When you enter the trade, right now the market is very, very aggressive. It became very aggressive. It changed a lot. So what's happening now? It goes up your way. It takes first take profit, it takes second take profit, and then it's sharply reverse. It's very rare when the price is reaching the third take profit. That's what's happening right now. So how do we teach our students? In our school, actually, we teach our students to enter the trade in part, so partially, like it does big participant. A large participant cannot just enter with one big chunk. If they enter with $1 million all at once, they will simply get slippage or get squeezed, and the price will move away from the entry. So they build their position in parts for a long time. And we teach you to do the same. We build our position in parts, properly averaging it according to the system, of course. And also we are fixing our position also in parts, in small parts. As I said, what about 1 to 3, this risk management? as I said, about 2 years ago already, 1-to-3 ratio in intraday trading, it started to work worse. I realized it about 2 years ago. As I said, maximum it's 1-to-2. 1-to-2. This is real. Yeah, it happens. It's stable now. So, before entering the trade, it doesn't matter what kind of style you're using. Before entering the trade, what do we do first? First, of course, we are doing technical analysis. This is very important and we have to do it. Let's write it down because you have to know it. We perform technical analysis. This is very important. That means we'll look at structure, set levels, and evaluate impulses and understand where we are. Either we're here or exactly at the level. And here you can also add a fundamental factor. Yes, even in intraday, because I will explain now why. Because we are traders and we have to look through all of it. So technical analysis plus fundamental, it will be very strong analysis of your asset. Let's write it down. Fundamental. Because technical analysis and fundamental analysis are the basics. Here in intraday, especially technical. Why do we focus on it so much? Because it's a foundation of all foundations. In any trading style such as investing, intraday, scalping, you still rely on chart. And technical analysis, it's always your starting point. This is first what you have to do. Now, let's clearly define what actually intraday is. First, you found a good entry. You found a good entry, for example. Second, you made a decision. You enter the trade and then you don't touch it. That's all. So what does it mean? You put your stop loss, you put your take profit, and that's all. And you don't touch it anymore. That's all. So, for example, here it is an entry point. Here is your take profit. And that's all. It's the trade lives its own life. That's what I want to say. You can go for business, just check it sometimes in the evening, check it sometimes in the morning. A little bit control with one eye. So, but that's intraday. You don't touch it anymore. Either you take profit here, either you take stop loss. That's all. You don't interfere without a reason. Okay, so let's write down. I want to write down. There are advantages and disadvantages as well. Let's remove this one. What is the main advantage of intraday trading? It's like an investment. As I said, you enter and you wait, and that's all. So the first I would write down, I would say it's calm trading. It's calmness, right? Calm and structured trading style. Let's write this like this: calm and structured trading style. It is an advantage of this style. Many people like it actually, and they are good at it. So during the trade, you don't need to sit in front of the monitor all the time, right? There is less stress, and it suits actually busy people. You set the parameters, and the market does its job. You don't do anything. This is calm trading, and that's a big plus of it. You don't spend your nerves. Calm trading style. So, what are the disadvantages? Disadvantages of intraday. Sometimes you wait a day or even a few days for trade to reach your take profit, right? So it can last long time, right? As we wrote here somewhere, 1, 2, 3 days, it can go long time. So let's write down like this. It's slow results. Well, for me, it's slow. Slow results. Because I want to take the profit in the moment and go to sleep. The trade, another one, the trade can stay around break even. It may go into a small drawdown as well. So you need to be patient here. Let's write this like psychology of waiting. I think everybody will understand what it means. Psychology of waiting. It's also a disadvantage because you have to be calm. You have to be patient. The crypto market works 24/7. It doesn't have breaks. It doesn't have it doesn't close, you know. It works 24/7, and moves can happen at night. So if you miscalculate your stop or don't account for volatility, you can wake up already in red. That's actually the market is moving, most of the movements happening at night. So let's write down this also like disadvantage, night movements. I want to write it like this. Night movements. So what else do we have here? If you miscalculated your stop loss, for example, it comes here, it takes your stop loss, and then it goes your way. This is happening all the time. All the time. So, why? Because market is very aggressive right now, as I said before. It can hit your stop and then move in your direction. Let's write like aggressive market. Aggressive market. That's why intraday is not just about entering a trade and forgetting about it, you know. It's a system anyhow. You have to, before entering it, you have to calculate, you have to be patient, and of course you have to understand market structure. this is also important. There is one more downside that happens very often, and in my opinion, it's one of the tickiest one. What's happening? You put your take profit here, take profit, you put your stop loss, and what's happening here is 3%. Let's take 1 to 3 ratio. And what's happening? You enter your position here, the price goes up here your way. At night when you sleep, it sharply reverses and goes down. And you're already, when you wake up, you're already in red. What's happening here? What's happening? The price moves to 2.9%, almost 3%, almost at your take profit, but it doesn't quite touch it. Turns around and goes down. You come back, you open the terminal and say, how did this happen? It was almost at the target and now it has already taken me into red. And actually this moment is very painful because the trader could have calmly taken 1 to 2 and be happy. But he decided to wait for the maximum and the market didn't forget it. So believe me, it's frustrating. I think we have all experienced this picture, exactly this picture. So I would state that this is the main downside of intraday trading. Let's write like this. Price may not reach the target. And this is a very common situation, and with the current market volatility, it happens more and more often. The market has become more aggressive, so it's happening very often. Okay, okay, colleagues, is everything clear about intraday? Our next style is very interesting. That's my favorite style. Honestly, for me personally, scalping is the highest skill, the highest level in trading. That's what I'm into it, because I want to earn money in the moment, because scalping is working in the moment. Okay, let's write this down. Our next style is scalping. What is scalping? As I said, it's a working here and now. Yeah. Working here and now. You don't have to wait a week. You don't have to wait a month. You make a decision, enter the trade, and manage the situation in real time. This is scalping. Let's right away. I'm very excited and I would like to write down advantages of scalping. So you are in the market. You see the movement and you manage the trade. You are here and now. And everything depends on your decision. So I would say this is a full control of the situation. Control. Oops. Control of the situation. And this is one of the best advantage, I think. The second one, you can get daily profit, good daily profit, exactly per day. With systematic work, you can get results daily. I repeat it, daily. Good daily profit. And all of these two advantages, when you go through this every day, you control the situations, you analyze charts, you see on participants what's going on market. It comes, after all, with the time comes experience. So we build experience by working every day with the chart, with market. Let's write this also, it's also important. Experience. So in scalping, you build screen time very quickly, yeah? And over time, you start seeing the market differently. You begin to feel entry points. You understand where real formations are and where it's just a noise. But this comes only through hard work, focus, and calmness. A professional scalper with the right approach can achieve solid percentages. Actually, after the training, we have a benchmark, around 2% of the deposit per day. Yeah, 2%. It's per day. $2 per day is the minimum we aim for. And for our students, the general target is about 3% of the deposit per day. 3%. If someone thinks that it's easy, no, it's not. It's very difficult, actually. It requires hard discipline, clear algorithms, and systematic work. And many people think that scalping is just jump in and jump out. 100 trades a day and that's it, you're a hero. No, it doesn't work like that at all. We work accordingly to a clear algorithm, strictly within a system. Sometimes it's 3 quality trades, sometimes 5, but it's never random. And to achieve consistent results, you have to follow the algorithm for a long time. So, here is the question that worries everyone. How does a beginner start? How do you get to prop trading? It's quite easy. There is nothing difficult. After the second lesson, each of you will be connected to prop accounts. We will start practicing and placing real trades. Okay, so don't worry, everybody will be registered. Now I would like to make some simple maths in order for you to realize this 2%. Maybe somebody think that it's very little. Let's take 2% a day, and for example, we assume 20 trading days per month, okay? Let's leave about 10 days for rest. 20 days. So it's 40% per month. Can you imagine 40%? How does that sound? I think that's good, no? Impressive, right? Impressive. But that is already a professional level. First, you have to learn how to do that. And here is the key point. This 40%, the main goal is not to make 40%. It's about to keep it. It's about consistently maintaining 2% a day. And the real goal is to learn how to ride the move. You have to learn how to ride it, how to trail the stop and try to make big movement, to take big movement. Not just grab small profits, but manage the trade correctly. That's important. And at the beginning, everyone makes 10, 20 trades per day. That's normal. It's part of the learning stage, you know, but over time, the goal is to reduce the number of trades and increase the quality. And believe me, this is very powerful. I want to write down this like a formula. Fewer trades equals to maximum concentration and equals to profit protection. This is like a main rule. I want you to remember. And believe me, this is powerful. This is very powerful. Okay, I want to leave it somewhere up here. Let's put it like this. Okay, what else do we have here in advantages? Your capital is always working, always. You close a trade and the money is free. You can use it again. There is no waiting for half a year like an investment. And that's a huge plus. For me, it's a huge plus. Let's write like this, like capital is not locked. It's always working. So you made one trade, you came out. You make profit, you came out. You have money again, you can enter again. It's not frozen. Yes, of course, trades are often quick, although actually it's important to understand that not always. Sometimes scalping can turn into a longer position if the structure allows it. But the foundation is dynamics and control. But when we transfer our trade into longer position, it's already a mix of two styles. We will talk about it today also. But now I want to write down the downsides of scalping because there are disadvantages of scalping. Let's look at them because they are important. And let's be honest, scalping requires full concentration. You cannot get distracted or operate on autopilot, you know, so it's quite high workload. And it's difficult for some people. Let's write this down like this. Workload. Also, fast movements, high volatility, and the need to make instant decisions. Well, your mindset has to be stable here. This is quite stressful. So let's write it down. Stress. As well, scalping means being present and involved into the process. Your capital isn't locked, but you pay with your attention. You have to be in the moment. You cannot go for a walk when your trade is open. So let's write down that it takes time. Yeah, let's write like this. Time. Needs time. Screen time, like this. And of course, there is also a technical side. This is one of the important, because I will explain. A good and stable internet connection is essential. Why? Because with minimal delay in the moment, seconds are matter. This is scalping. Seconds are matter. And that's why technical moment of internet connection or computer, it's important. You have to fix all of it before entering the trade. So technical sides. And the fifth downside is emotions. Without discipline, you can quickly lose control. Start overtrading and try to take revenge on the market. I think many of us went through this. When you lose money, you want to get revenged. But it doesn't work like this. Emotions. Okay, see how many disadvantages we have here. But here is what is important. When a person goes through investments and intraday trading and then comes to scalping, they start to see market differently. They already understand the context, they understand the structure, and then scalping stops feeling random and becomes like a system. You already understand more deeply the market. So for me, it is a best style. Yes, it's stressful, but psychologically, scalping is more difficult. It's true, because it's not about set and forget like an investment or intraday. You're inside of the movement. And here's the saying that the faster you earn, the faster you lose, I think, like this. And that's actually very accurate. This is something you really need to work on, because it's not a market problem. It's a psychological one. It's your problem. You make money, you want more. We are human beings. When we make money, we get money, we want more money. And you cannot stop. You don't stop, the market takes it back. So, and here begins the most common scalper mistake. What is it? Fast money goes fast, right? A person makes a good profit, and instead of locking it in the result and stopping the trading, they stay in the market. This is a big, huge mistake. Why? Because euphoria kicks in. I caught the move, I feel the market. Okay, I will catch another one. But the market at this time, the market changed its direction and moves another way. So, and you can see how your deposit melt away. Okay, let's step back a little bit. I want to tell you that honestly, tell me, when you look at the chart, what is the first thing you think about? I think most of you think about profit. So when you see 50%, that you can take 50%, first what you think, it's 50% profit, right? You don't think about loss. You think about 50% profit, where you can earn money. And this is the thinking of beginners. Most beginners have a profit calculator in their heads first. This is their way of thinking. So where is the mistake? The mistake is that you work based on profit. We used to work that way too, before, of course. But then the concept changed, and now I work based on loss. And the first question is no longer how much I can earn, but how much I can lose. If here is 20%, first what I will think about, what will I do if the price will go down against me? If I enter here and the price will go against me. This is what I'm thinking about the loss. How much can I lose? Not about what I will earn. So first you think about loss, and then you think about profit. This is the way how professionals work. Let's see some, maybe on chart I will show you some example. Oops. What is this? Okay, let's see here. For example, let's put first levels. I will put some levels. Now I can see it here. Then another one here, for example. And another one here. Okay, let's see. For example, I just want to show you on the chart what can happen. If, for example, I want to enter my trade, I found the entry point and I would like to, I decided to enter my trade over here. What is my thinking? What is the first question which I will think about? I can see that there is a level of support over here, and I understand the price can go down here. Let's measure it. How much I can lose if I enter and the price will go against me? It's 5%. Okay, here is the 5%. I have to know that. And I have to make a decision if something will go against me. So, how much do we have here? We have 6%. Okay, that's good. If it goes my way, I will take 6% take profit. I don't think about it even. I don't even think. Because for me is more important what will I do if I lose 5%, if it goes against me. So here is the key point. The goal is not to earn more. The goal is to hold what you already earned. You know, that's why, for example, if you earn 10% already, And inside you start to feel restless. You want more. You think, well, the market is moving. There will be another move. I will earn more. And that's the key point. The goal is not to earn. The goal is to hold this 10%. What you already earned. And this, guys, is pure psychology, and it's absolutely the same for everyone. And later you sit and think, well, why did I enter again? I already made 10%. Why didn't I stop? Why didn't I close the terminal? Well, why didn't I keep the day in the green? The market gives. So be happy, take it. It's not obligated to give more, you know? Of course, that's greed. This is greed. Everybody has it. And we have to fight with it. We have to protect profit. We have to fix part and go away from the market. What we do, like as scalpers, we put stop loss. It starts moving up. It goes up there. We moved our stop loss to break even, and that's all. And we forget about it. We control the situation, of course, but I am calm already because my stop loss is already protected. Even if the price will reverse and hit my stop loss, I will be in profit. So, and my day will be in green. Yeah, I make profit, that's all. And in the morning I wake up, my day is green, my psychology is completely different, my mood is different. So remember, stability is more important than euphoria. Actually, we used to say in our community, like a scalper is like a sniper. You know, that's what we say. Because it's true, we wait, and then take one precise shot. That's all. But that's already the next stage. At the beginning, you need experience simply watching the market. And experience comes through repetition. You take a trade, you analyze it. You take another trade, you analyze it again. Theory, of course, it's important, but practice is the foundation also. You have to practice. It's, you know, it's like learning to drive a car or bicycle. At first it's difficult, clutch, gears, mirrors, you have to think about everything at once. I think everybody went through this. But over time it becomes automatics. So scalping is the same. At first you think about every click, how you have to click, what you have to think about. And later you operate naturally already in the flow. So you start recognizing formations. You begin to feel the entry, but that only comes with time. That's okay, that's normal. And one more important thing, don't rush. It's also very, very important. Don't rush. Okay, let's go back to the downsides of scalping and some more where we were writing. I think here somewhere. Oops. Let's look for it. I think it was like this. Oof. A lot of writing. Okay. Let's write the next one. Yes, we have more. We have more disadvantages. We have more downsides in scalping. And I want to write down one more thing, and it's hard to start. Actually, some may disagree with me, but it's true. Getting into scalping isn't easy. It's not easy at all. Let's write down like this: hard to start. This is not about jumping in and getting lucky. It's about patience, waiting for your zone, and using clear filters. So the entry, it's not easy to find. That's why quality entries, it's hard to find. Quality, really quality. You can enter at any place, but the quality entry, it's hard to find. And I want to write it down also as well in order you to know about it and to remember about it. Entries are difficult to find. And of course, there is a psychological pressure. You have to make quick decision. It's a very quick decisions and handle stress and emotions. Because in scalping, without discipline, it's very hard to grow. That's why we have written already stress, but I want to write down like separate point, like a psychological pressure. Psychological pressure. But you know, guys, what I want to say, if you go through all of this, if you get through this stage, you will handle psychological pressure. You can make and handle your emotions. You will handle with stress, with workload. If you don't quit at the beginning and give yourself time, believe me, scalping opens a completely new level of market understanding. This is as I said, this is a high level of trading. It's scalping. So guys, I think let's take a little bit break. We already went through a lot of things, and we have a lot ahead. So let's get a little break for 10 minutes, and we will return and continue the most interesting material ahead. So let me write down 10 minutes break. Okay, see you in 10 minutes. Okay, guys, let's continue. Let's go on to the next most interesting style in trading. It's called swing trading. Swing trading. It's an interesting name, right? What is swing trading actually? Swing trading, it is a combination of scalping and intraday. Let's write it down right away, and then I will explain how it works. It's scalping plus intraday. Intraday. So what is the idea behind swing trading? Let me draw it. For example, there is a level and the asset goes up. So what's happening? You enter your trade over here. You found a good entry point. You build your position and you enter it. The price starts moving up. You set your take profit. You set your stop loss. Stop loss is very important. But before entering the trade, we do strict technical analysis. We clearly define this entry point and the potential move also. Well, roughly, of course, but anyhow, roughly but precisely. Then at the first stage, what we do, we work like scalpers. The trade starts moving, we manage it in real time, we take partial profits according to the algorithm and log them in step by step. Step by step, look, you're logging it partially. But here is the key point. We don't close the entire position here. We leave part of it open and convert it into an intraday position. So what's happening? Here we are scalpers. Here is the scalping. And here it is already intraday. You leave some part of your position and you leave it for a walk, let's say like this. Intraday. So in other words, we have already secured part of the position here. We took some profits and we let the remaining part continue to run here. And all of this we calculate and plan in advance. This is also very important when you enter the trade. How does it look in practice? Let's see. I want to show you. Maybe we'll find something here. Let's see. Well, let's take this part of the chart. What can we see here? For example, we have a level here, as we can see. It's in green, of course, it's a level of support. So what's happening here? You enter your position, for example, over here. The impulse start moving up and you start closing your position according to the system, of course, according to the algorithm, but not because you're scared, not because that's what like you feel. It's all planned in advance. Then you keep a portion of the position open. If the market confirms the move, then you move your stop to break even and start managing the trade. You see, it start going on by trend up. You can use a trailing stop or adjust it manually based on structure. What can happen here? It depends. Either the stop is hit, for example, you put your stop already, you're trailing it up with the price. Either the first case that the stop will hit, or you decide to close near to the top over here. You just exit the position up here. And that's what called riding the move. Why is it so powerful? Because sometimes the market gives more than you expect. And if you always close everything here on the first impulse, you will never catch a bigger move. So swing trading allows you to lock in profit, reduce your risk, and keep upside potential. It's a very strong style. I like it also, and I use it sometimes. So we build the position in specific zone and close parts strictly according to the algorithm. And I strongly ask you to stick to it, because otherwise the question after that start, why did I get stopped out? Why didn't it reach the target? Why did it reverse? So many questions if you don't do like in algorithms. So if you follow the system, there are no unnecessary questions, you know, even if it is just $21. And don't forget, these are real money. $21, it's a real money. And I repeat it again. Many people start treating small amounts like a game, you know, and they break discipline and think it's just a small change. Nothing is happening. Let me play. And that's exactly when the account starts to drain. If you work strictly according to the strategy, which has already been tested many times, believe me, the results will come. And one more time I will repeat that we work without leverage, with no leverage. When I talk about 10%, I mean pure 10%. You know, it's 10%, it means 10% without leverage. And this is crucial to understand actually, because 10% without leverage is one thing, but 10% with 10x leverage is a completely different story, and with completely different risk here. So we build a foundation step by step. First system, then discipline, then scaling. And please guys, don't focus on the fact that you have only $21 right now, because today you have $21. Tomorrow it could be $2,000, you know, then it's $10,000. But as I said, 10%, it's 10%, and it's clean. We don't need leverages. Why do we have to increase our risk with leverage if your stop loss is already calculated? You are already done the analysis, entered calmly, and you work calmly. No rush, no pressure, no leverage. And don't be greedy. First, learn how to work correctly, and then already you will have knowledge, and you can increase your amount, your size, and this is already another money. Okay, now is the question, how to use this style here. We were talking about partial fixing and then leaving part of it. The first step is we should determine what portion of your trading size feels like comfortable for you to leave for work, you know. So let's say you have $1,000, for example, $1,000 you have. Deposit, this is deposit. That doesn't mean you should put the entire amount into one position. You need to decide before entering, in advance, you need to decide what part you are willing to leave running here. So you enter the trade, your price moves in your favor, you lock in part of the position, always in small portions, only in small portions. and then you leave part of it. So if you have $1,000, let's say you might leave 5% of your deposit. 5%, this is $50 of your deposit. So this $50 should be over here left for running. For beginners, we usually recommend leaving about 5% of trading size to run. So for now, there is no need to leave more at the start. So what's happening next? If the market continues moving in your favor and your profit grows, you move your stop to break even, as I said before. And now you're calm already. So from here, you have two options. First, if you want to trail the stop, you trail it. If you don't want, set a take profit and just wait. That's all. Your stop is already at break-even somewhere here, which means there is no downside risk anymore, and you have only take profit here. So either take profit, either stop loss it will hit. So there is no difference. Okay, let's talk about psychology a little bit because it's important. Imagine you're already up to 10%. Let me even draw this again. Imagine you have 10%. A beginner might think, I will move my stop to 8%. Why should I lose some profits? Why should I lose? And what's happening? The market makes a small pullback and hits the stop at 8% and then continues moving higher. That's happening like this. It hits the stop and then goes up there. What's happening? You just fix it here and your position is closed. That's all. Yes, 8%, it's okay, it's good. But what do professionals? They set their stop loss, for example, at 5% here. Why? Because that's enough for them. Actually, that's a solid gain anyhow. And if the market continues, they will make more. It will hit 8% and it can go more higher, even to 200% and 500%. So that what means riding the move. You have to know, and you don't have to be greedy. One more thing is very important is that you don't have to move your stop loss too close to the current price. So give the market some room, pullbacks are normal because all market is like a wave, it goes with the waves. It cannot go just one way. So pullbacks are normal. So that's why we need to give a market some air, let's say like this. It breathes. You have to give a breath. If you decide to hold the position, allow it. Give it some space. But anyhow, in this situation, everything depends on two factors. You cannot move your stop loss anywhere you want. It depends on two factors. First, your position size. It's important. And second, your psychology, as I said here. Okay, now the key question. What is deposit acceleration? Many people ask about it. Deposit acceleration actually is almost always the fastest road to liquidation. It is the wrong mindset. Yes, it sounds attractive, but in most cases it ends up the same way. That's why in our school we teach you not to focus on dollars, not dollars, but on percent. So we don't look at the dollars, we look at the percentages. This is the way we are thinking. This is the way professional thinks, actually. And remember the rule number 1. The main task of a trader is to preserve the deposit. This is the very important rule. I will write it down and I will send it to you in the chat. This is the capital preservation. It's a very important. Capital preservation. This is very important. Let it be even 32. Like this. Okay, so please remember this. Not to earn more money, but to preserve and protect what you have already earned. And yes, that's the hardest part, but it's also the most important. So remember this, please. Now about the technical side. Yes, we can use an automatic trailing, of course. Here you can put in terminal. It is possible. It exists and it works, but we prefer to manage trades manually, actually, because when you manage the position yourself, agree with me, you control the situation, you see what's happening in real time, and you make decision accordingly to the situation. And that's why, for me, I prefer use my hands. As well, we teach different styles and algorithms, like such as grid position building. You all know, I think you all know grid bots. So we also teach grid position building, high frequency scalping, and phase trading. For example, grid position building is a very aggressive. It's a very aggressive and risky tool, and it definitely requires a separate lesson. Why? Because the range of the set can be as wide as 20%. Can you imagine? 20%. It's a lot. And if you don't calculate the risks properly and don't clearly define your stop or boundary, it can quickly turn into a problem. And everything there depends on the size of the deposit and precise risk calculation. So this you have to remember. But it's up to you. Okay, so guys, we covered a light but very important things. So these are the styles, and each of you for sure will choose his own, because we are all different, as I said before. Right now I would like to cover a light but very important foundation, and actually you will have a homework based on it. So what is level? What is level? We are coming to the interesting thing. What is level? A level, it is an area, right? What is correct definition? A level, it is an area. It's not just a thin line, not just a mark on the chart. It is a zone where the price has repeatedly come. Let's see something, let's find something. I want to find some good example for you. Okay. No, I don't like it here. Let's find something else. Well, let's see, maybe something here. Okay, yeah, let's take this one, this example. So, as I said, it's not a thin line. It's not just a mark on the chart, it's a zone where the price has repeatedly come. Let's look at this example. The first type of level which we will go through, it's a level from the wick of an impulse candle. We all can see this wick of this candle. If I would want to put a level, I would put it like this, right on the top of the wick. You see? Now we'll see what does it mean. This is the level of resistance. As you remember, I told you we always mark it in red. Just remember it. Now look carefully. The market moves up here. Everything looks strong. The trend is developing. And then suddenly an impulse candle appears with a long wick. What does this tell us about? It means a large participant stepped into it. The price tried to continue higher, but was sharply pushed back. And the wick of the candle shows us the area of interest. And it's like a large player saying, this is where I'm active, I'm here. We don't have to trade actually the candle itself, but we must take this zone into account because we understand that there is someone big here. Why is it important? It is important to understand that a level is not thin line again. I will repeat it again and again. It's a zone which we have to know about. It is a zone. Okay, so this is a zone. And what can happen in this zone? A pause in the move, a phase shift, or trend reversal. That's what happened here. You see, it was going up, the price, and then it reverses and goes down. So, but nobody knows what's going to happen here. Because the market is moving up, buyers are in control, everything looks good. And suddenly, there is a sharp reversal. Sometimes it happens instantly with one strong candle like this, you know. It can happen like this. I think everybody who trades has seen situation like this. So one time, price approaches the area several times, you see here, testing it again and again, and this where starts getting interesting. There was a trend, let's mark it like this. There was a trend, we mark it in green because it goes up. So, and suddenly it reverses. What's happening here? The buyers were calmly sitting here, and then who came here? Sellers, right? And they are bigger because here is somebody is staying behind this level. I think you have already heard about market phases, right? There are three main phases. It is accumulation, participation, and distribution. So what we can see here, we can see that here was accumulation, then it becomes participation, yeah, because a big volume, it start pushing up the price. and then distribution. Actually, very often the shift between these phases happens inside a key level area. For example, first accumulation, then participation of large money, and then distribution. It's inside of these zones can happen break of structure. That's what happened here, actually. You see here. The trend was moving up and suddenly the structure changes sharply. So the first type, as I said, it's a level of the wick of an impulse candle. It is an area where a large participant has shown activity. Here, it pulled back the price. And the second level, it is a break of structure. That's when the market was moving in one side. You can see here one side it was going down in one direction and then suddenly reverses. Here, this point is called break of structure. Here is also a zone represents an area of interest. So I think this is quite clear because we all can see this. All of the market consists of, like I said before, like waves. And if you can see the reverses, it means there is something going on here. We don't know what will happen here actually, because the price in this case can go or up or down. We don't know who will win, because it is a struggle here between buyers and sellers. They struggle, and who win, nobody knows. So, as I said, a level is an area where the probability of a reaction increases. Yeah, here, probability. We don't know exactly, as I said, but in this zone, the likelihood of a market response is higher. So exactly in where we can look for entry points, or we can place stop losses, make a decision to put a stop loss, and actually plan our next actions, what we will do next. But of course, only if there is a strong formation and additional confirmation. That's the key. Okay, so we put our stop loss, for example, here, or we decide to go down, we know that we have to put stop loss up here above this wick of impulse candle. Okay, and as well, when you can see this kind of wick of candle impulse, there will be always volume. Now let's see. I want to write down the key signs of wick of an impulse candle. Now we are talking about it. Let's write it down. A key size wick of an impulse candle. Let's write it like this in green. Okay, now we are not talking about break of structure. Now we are talking only about wick of candle. Okay, so let me write it down. The key sign, there are two key signs. First, it's increased volatility. And second, it's increased volume. And it increased volume. These are two main signs. We will go deeper a little bit later into volatility. So now I want to say a little bit about it, but What is actually volatility? Volatility is a core tool in our system. It's something we are aggressively and systematically use. We select even our trading algorithm based on the asset's volatility because some setups work on low volatility, others only perform in high volatility. So we have to know about it. It's important. And if you ignore volatility, nothing will work consistently. So let's say, what is actually volatility? In simple terms, in simple words, volatility is the size of the candles. More precisely, it is the comparison between candle sizes. When an impulse candle appears, the range of movement expands sharply. For example, if one candle, regular candles, were moving 1-2%, for example, let's see here, 1-2%, for example, then it suddenly gets to 5-6% candle. So that's the signal. That's the signal. We can even measure here. Let's see. This candle is 2%, 2.2%. If we measure the next one, it's already 4.2%. And if we measure this red one with the wick of candle, it's already 6%. So 2, 4, 6, you see? That's the sign that volatility is starting to increase. It's increasing. And as we can see, the volume over here is also increasing. So it goes up. And this is the signs, volatility and volume. And what does it mean? It means that usually that the bigger players stepped into the market. So I want to show you, because you will have it in your homework, I want to show you how to measure volatility on the chart. Let's see. Let's see, for example, here we can see. Let's take this part. For example, let's say this part of the chart. If we will measure these candles, we can see 3%, 3.8, 3% almost. This one is 4.5%. This one is also 3.3%. So almost the same. Almost. So it's roughly the same volatility, so hasn't changed too much. And okay, the another example, if we will compare this green one, this green one, if we measure it, it's 4%. And now let's take this red candle. It's 19.5 almost, yeah? Yeah, 19.5%. Can you imagine how much time it increased? Almost 5 times, right? So that's no longer just a move. That's a shift in market dynamics. So in homework, you will need to identify areas where volatility shifts, where the market transitions from low volatility to high, and vice versa, and mark those zones on the chart. Like, let's see some examples. Maybe, no, this is the good example. You see, what do you have to do in your homework? You just have to show, you see there is no volume at all, almost. There is no volume. You have to find this area, and then sharply it starts moving up. So this transition from the low volatility to high volatility, you have to show on the chart. and like this, send the homework. Okay? So important, remember, if volatility expands in your direction, that's a reason to increase profit potential in the current trade. So this is and you can take more from the market simply because you see acceleration. And what is the main conclusion in that? So volatility is not some abstract concept. It is first a signal of market acceleration. If you can see increasing of volatility, it is a sign of large money entering. Can you imagine how much money it needs to push this price like this? Let's measure it. How much? 57% for 2 hours, 56. Can you imagine how much money needs to push price like this? So what else? It is an indicator of shifting dynamics, of course. And of course, it's a tool for position management then. You will be surprised actually how much simpler trading becomes when you look at the market from the right angle. Now you know that when you see volume, increased volume, and you see increased volatility, you already know what does it mean. So I think it's quite clear about volatility, what is volatility and how do we measure it. If there is some questions left, so please write it down in the chat. I will answer them. Okay, now let's get back to our impulse week level. We have something else to talk about. Where we were. Somewhere here. Let's take this example. That's a good example. I like it. Okay. We all can see this wick and the volume. Can you see how big is it? It is. Look, what is interesting here? If we expand our level, if we put our level, yeah, it's in red, and if we will expand it left to the left, we can see confirmation in this area as well as on the right side. You see how many times the price was pushing this level. So what does that tell us? It shows that a large player is defending this area and preventing the price from going higher. And if we look at the volume, specifically where the level is being tested, you see here, we can even draw this level in 4 pixels thick because it's strong. It's strong, yeah, like this, you see. What else we can see from here? And it's not only us, everybody, all participants on the market can see this area. And what does what the level which is touching many times, multiple times, how does it call? We will go through it next lesson, but today I just go ahead a little bit and I will say that when the price comes several times, multiple times to one point, it's called multi-touch level. We will go through it in details in the second lesson, but I can see also, I can see this level, another level here. You see the another one. There is also a volume here, not like here, but anyhow it is big. It's smaller, but anyhow significant. And it also means that the volatility increased here in this sphere. So let me go through a little bit levels. Okay, if we can put level below the price, it is a support level. Let me write it down here in order you to know it. Okay, this is a support level. If we put a level above the price, it is a resistance level, and we put it in red. We already know it. Resistance level. Okay, and this is actually important because many students start drawing like in one color, but I always say we have to be disciplined. So if it is resistance, put it please in red. If it is support, please put it in green. It is important. It's your discipline. How do we put it? We put it exactly on the wick, on the top of the wick of the candle. You see? And that's what you have to do. In your homework, you will have to look for this kind of wicks and put the levels. But please try to find clear levels without any intersections, okay? And don't forget about volatility. It should be increased volatility. It should be increased volume, okay? So, the second type, let's move on a little bit here. Further, the second type of level is a break of structure, which I want to give it to you today because it's important. It's one of the important structure. It's not that difficult, but it's important. Break of structure. Let's start from here. Okay, we are dealing with large participants and their footprints actually. Do you remember we were talking about it? And not only candle wicks. So footprints, it's not like a candle wick only. The break of structure, when the structure shifts, this is also a footprint of large participant. The market changes its direction through the break of structure. The break of structure is the moment when the asset shifts its direction. And to see it clearly, you don't need to stretch the chart, like this. Just zoom it out a little bit, like this, in order for you to see a global picture. Okay? You need to see overall structure of the movement and how the break looks within it. If we will take this part of chart, we can see that the asset was moving down. At some point, it was held a little bit and then moved up. Then again down and then again up. And as we can see, inside of one big structure, there are small breaks, but we are not interested in the major ones, okay? We need the big breaks, more than 5%. Okay, let me write down like this. First of all, I want to write down break of structure. Break of structure, or it's also saying like BOS. Okay, we need break of structure, those which are more than 5%. This is the important rule. The Next one is that we look for them on 1 hour time frame. This is also important. 1 hour time frame. Like this. Make everything beautiful. Okay. Okay, so why do we need 5%? Because a large break of structure often signals to a shift in market. And that doesn't happen by accident. Now, here is an important question. Who actually has the power to change the direction of the market? Absolutely correct. Only a large participant. So, how to look for break of structure? Let's go step by step. First, I would tell you, let's do like this. First, as a beginners, you take please a brush. You take a brush and you go and draw it. Literally draw it, the move on the chart. So this helps you and your brain to see the structure. You see, up, down. Don't forget that we need the big ones. We don't need the small ones. So, as we can see, now it's easy to find them. We don't need the small ones, you know, these ones. We don't need them. We need the big ones, this which we draw right now. I would draw even like this also. And then what we do? And then we look for points where direction changes sharply. Not slightly, but clearly. Excuse me. So third, we take a ruler. There is a ruler here in the instrument. We take a ruler and we start measure each break of structure. As we say, we need more than 5%. It's 12%. Is it okay? Yeah, it's good. For us, it's good. So we put here the red one. Don't forget about it. The red ray. Okay, then we go ahead. Let's check this one. It's also 13%. Is it okay for us? Yes, it's also okay. We put it here. This one, I think we don't need to measure it. It looks like more than 5%. We put it here as well. So let's see down. From the down, let's measure it also. It's 9%, almost 10%. Do we need it? Yes, we can take it also. So we put it here. But in green one, don't forget. Okay, you can say that this, for example, break of structure is also very big. We can put it here. Of course we can. Let's put. Now I will explain you. Look what's happening here. When we put this level, we can see an intersection. Can you see it? Yeah. The level must be clean without intersections. You remember I told you? So I will leave this level, but I will do it like this. Let's mark it like this, that we don't need. Don't put this kind of levels. There is no intersection. Okay, what we can put here, we can put also over here. This is the good level. This is the big break of structure. Okay, so if we put here, we can see that there is also intersection when we don't put here the level. Okay, so, and I want to write even here down No intersection. Please don't send this kind of levels for homework. Don't do it. No intersection. Okay. The level must be clean, like here. There is nothing in front of it, you see? On its way. There is nothing here. Okay. Okay, let's look in the most important point about break of structure. A break of structure is a trend reversal. Okay. We are looking for strong breaks, 5% and above. The level is placed at the extreme point of the week. And most importantly, it must be clean, without intersections. So for your homework, you need to find strong break of structures, not small, not local ones, but those that truly change the overall structure. Okay, and of course, as I said before, it should be 1 hour. It should be founded on 1 hour time frame. We only plot levels based on market structure breaks on 1 hour time frame, not on 15 minutes, not on 5 minutes, only 1 hour. Why? Because we need a strong and clear structure. I repeat it and repeat it again. And one more thing, please don't plot 20 levels in one chart. Okay, very often people open a chart and start marking every small break, and there is nothing clear in it. You cannot understand what person understand or not. So choose just the biggest one, the most powerful ones. Okay. So, okay, in your homework, expect exactly that, clean large break of structure levels. Now I want to explain briefly about phase trading. I think maybe somebody heard about it, but I don't know. So phase trading is our internal development. Actually, that is something that Vladislav built after analyzing a huge number of trades, which went through him and through us, through many traders. And here we return to the beginning of our lesson, if you remember. Remember I said that we work from risk, not from profit. Do you remember that? Yeah. Phase trading is about risk management. It's very powerful, actually. I want to quickly explain you what it actually is. Let's draw it in green. So we have a level. We have, let's say, like this. Okay. There is a strong trend. I find and develop my position here, and I want to go. I know I calculated everything. Everything is strong entry. I set my stop loss because here is also a strong level. And what's happening? What is phase trading? Phase trading is about risk management. Imagine if we enter a position here and everything we calculated, as I said, the entry is strong, there is a logic behind it, but suddenly price start moving against you. It start falling down. That happens often now, actually, on the market. What does a beginner usually do here? Panic. That's the first. What should I do? Close the trade at loss? Or what? Or he starts averaging randomly without any plans here. This is where phase trading actually begins. When the price goes against you. It's not a random averaging. It's not trying to save a bad position. It is a pre-calculated accumulation in a defined area. Price goes down against you, and we start slowly building the position in parts like a large participant would. In this range, actually, this working range can vary. It can be 1%, it's small one. It can be 2%. It can be 6%. It can be even 20%. Yes, can you imagine 20% minus? But if you know how to work in this phase, falling phase, let's say like this, you can take even profit here. You can get out from the position in profit. Yeah, that's possible. This is the phase trading. It's a very strong strategy. So, this is in 2 words actually. I wanted you to know about it, how it works, but it requires at least 4 or 5 hours of intensive theory, and usually it takes 2-3 full lessons, so it's separate level of training in our school. Okay guys, now let's go through. I know that maybe many of you already know about it, but for the beginners, let's go through trading view. A quick word, fast. The platform we use is called TradingView, as you can see. I'll send the link in the chat. So what you have to do, you need to register and download the desktop of this version, desktop version. I think it's more convenient to work with. The free version actually is completely enough. You don't need to buy a paid plan. After registration, when you open TradingView for the first time, you will see a large list of different assets over here from the right side available on the platform. Delete all the default assets from the list. How to delete? When you point at some asset, you can see here on the right side of each asset, you will see a trash bin icon. So click it and remove everything, all what you will have. For example, if I click here, you see there is no, it disappears. I click here, it disappears. So do like this all the way, everything. So, and after that, you will have to add a list of assets, which you will have in your homework. Actually, you can add your own as well, so it's not forbidden, of course. How to add an asset? Over here, up here, there is a plus sign. You just press it, and in here, you just write down name of the asset. So, for example, let's add some asset. For example, ADA. We write USDT point P. I write it like this in order faster to find it. So here you can see the list of ADA, USDT point P. And here you can see the market, exchange market. We need Binance. What is the point P? This is a perpetual contract. This is future contracts. And we need Binance, as I said. So you press plus button and it appears over here, you see? That's all. Very easy. When you press it, it opens all the chart of ADA. Okay. You see? Okay, now let's talk about the tool panel. Actually, fast. On the left side of your trading view, you will see the tool panel. You can pin the tools you need by clicking the star icon. You see, this is the panel which with the tools which I pinned. How to do that? For example, you point here, there is an arrow, press it, and you will need a ray of you will need a ray. Let's change. I'll change the okay. You will need the ray tool. This is for trend. You will have it in English. You will need a horizontal ray for levels. You see there is a star here. You press it and it appears here on the separate panel. Also, you will have a rectangle. You can look for it here. The long position tool and short position tool. This is for the second lesson. Also, you will have to set up time frames for quick access. So you press here, you put stars, and it comes up here on the panel. For sure, set up 1 hour. This is very important for us because all your homework you will do on 1 hour time frame. Okay, so let's quickly, we almost finished. Let's quickly recap how to correctly set a level. Let's see it here. Yeah. For fast recap, there is a simple rule. Everything above the current price, here is the current price, you can see it. Everything above the current price, it is resistance, and it is marked in red. Everything below the price, it is a support, and we mark it in green. Okay, this you have to remember. And we also can put, for example, here also there is a wick of impulse candle, you see. A break of structure you put at the top in red, break of structure at the bottom you marked in green. And don't forget that we draw the ray from the right to left, right? So, how to submit your homework? Once you have finished marking everything and your chart is ready, click the camera icon over here, right top. You see, if you press here, there is a copy image. You copy image, you press it, and then go to the Telegram group, press Ctrl+V, and send it. Just don't forget, please, to label your chart clearly, because it will be easy to check your homework. If you don't receive a reply immediately, don't worry. The mentors will definitely review everything. Okay, one more important point what I want to say about it is a registration in the prop company. All the structures will be included in the homework, don't worry. You will need to send your email and your Telegram username via internal bot. Starting from the second lesson, we will begin connecting you to prop accounts. Everybody will be registered, don't worry. So guys, let's summarize quickly what we covered today. Today we discussed trading styles, talked about psychology and covered technical analysis. We analyzed levels formed by the wick of an impulse candle, break of structure levels, learn how to measure moves in percentages and how to plot clean levels correctly. We also went through the basics of TradingView. Who don't know about it? I think that's quite a lot of information today. So in the second lesson, we'll go more deeper. We will break down volatility more deeper, more complex levels, manipulations, and risk management. But everything we will do step by step, okay? Don't worry. One more thing which I want to say, I'm often asked about one question. Many people ask me, what deposit should I start with? My answer is always actually maybe $100. I always say that it's better to start from the small amount, for example, $100. Okay, then you go slowly up, for example, for $400. Then you go to $600, then you go $1,000. That's better like this, slowly, step by step. Okay, actually the common mistake is jumping straight into the large amount, large size, to 5,000 or 10,000 without building experience first. First, you have to know all of this foundation. You have to practice, you have to try. And I'll be honest about myself. For example, today I consistently earn my 2% per day. But it took me 1 year to get there. And during this year, I was just stabilizing, finding my style, making mistakes, and learning how to manage my psychology. There was everything, I would honestly tell you. That's when I finally became consistently profitable. And this doesn't happen overnight, just believe me. It is a process, it is a journey, long journey. So you need a patience and discipline, of course. Oh, I almost forgot to mention one more thing, important point about our prop company. In our prop company, we work with two exchanges. It's Bybit and Binance. This gives us flexibility because for starters, for example, we usually recommend Bybit. Why? Because Bybit offers smaller lot size. You can enter for $2. For starters, it's okay. For beginners, it is a Bybit. Binance, you can enter $6. This is a minimal lot. Okay. Okay, what else? What else would I say? I would like to say first about our advanced training and the pricing, in order for you not to have any questions. There will be a separate post in the intensive group where you will find all the prices, the full program outline, and all the details. We will show everything absolutely clearly. Everything is transparent. We don't hide anything. Of course, we do monetize the training, of course, because actually our goal is not just to sell a course, We don't want just to sell. We want you to join, learn, stay with us in our prop company like a trader. And we want you to trade with us systematically, because it's much easier for us to work with disciplined traders who follow our strategies and manage risk properly within our framework. We are not interested in chaotic trading, or people who ignore the system. We are building a community of structured, disciplined traders. That's what actually we are aimed for. Okay, all right, guys. If there is no questions, I want to say thank you very much for your participation. There will be created a separate chat for homework, so send it please there in a separate chat. The recording will also be posted in the intensive group for you to rewatch if it's needed. And what I want to say, I was very happy to see you all, and I hope to see you next lesson. When it will be, there will be also announcement. And thank you very much for your attention. Bye bye for today.